All right, so we all know what happened Friday morning, right? John Williams came to the rescue of the market. Of course, he suggested that a December rate cut is still in the cards. Now, this was obviously welcome news considering the avalanche. I'm talking avalanche of commentary from the Federal Reserve hawks. Every day they're out there pressing their case. I will tell you, lost in all of these comments, though, were some compelling arguments made from beleaguered Fed Governor Lisa Cook about a rate cut. She put this post out last week in a speech she gave. What was really amazing to me, she covered asset valuation, private credit. She talked about hedge funds and their footprint in treasuries and AI and financial services. But the essence of all of this is how weak the jobs market is and how quickly it can crumble in a fragile economy. She really made the case for rate cuts. Of course, Fed member chatter has been contributing to increased market volatility, and that's got a lot of people frustrated and anxious. Although some are saying, hey, it's pretty good, it's tough, and we should have these debates. I'm not an advocate. Listen, I'm an advocate for disagreement and debate, but I'm not an advocate for having public forums where the hawks are campaigning, and that's what they've been doing. I think the Federal Reserve officials have overstated the risk of inflation, and indeed, check this out. This is from Trueflation, one of a great source and one of the few real-time sources we have out there. 2.37. That ain't exploding, folks. And it really suggests to me that labor is what really is the problem. Labor market imploding. Meanwhile, of course, Scott Bessent very confident about a strong, non-inflationary economy in 2026. And with that, I'd like to bring in our next guest, Heritage Foundation Chief Economist, EJ Antoni. So, EJ, you know, a lot of folks have started to pivot to 2026, whether it's, Wall Street looking ahead, economists looking ahead. And most say it's going to be amazing. Most say, the big, beautiful bill becomes law. We got a lot of things coming from that. We got tax refunds. We may have an accommodative Fed. How do you see it? How are you modeling it right now?
I think that's a really, really good start. And then I would also throw in, I think we're going to continue to make good progress on the energy front, getting even more production. One of the things we've seen this year, it's really been a continuation in the last couple of years, Charles, has been the well count coming down. Mm-hmm. I'm hoping that that's going to not just stabilize, but actually reverse, which will really help supercharge production on that front. You get energy prices down, you get prices throughout the economy down.
It is amazing what we've done with fewer wells in terms of, production and prices, right? To your point, we can keep that moving. I want to talk about affordability because, it's going to be used every day next year. It's a political thing. It's a political buzzword. Mm-hmm. Cumulative inflation by president. So President Trump's first term, where we are right now, then you look at Joe Biden, President Biden. We never talked about affordability. I talked about it on this show, particularly with housing, but it wasn't the buzzword that everyone uses and everyone talks about right now. And my feeling is that the media pounding on this every day makes it worse because inflation expectations plays a role, doesn't it?
It certainly does, especially when it comes to the Fed decision that you were talking about earlier, right? So the Fed is really dependent on inflation expectations, probably more than they should be. I think they should be looking at the real-time data like you had up from Trueflation, for example. But one of the things that I think kind of gets lost in this whole discussion here with the different inflation rates from the different presidents is also wage growth, right? What we saw under Biden was not just the fact that prices went up over 20%. That's true, they did. But maybe more importantly was the fact that wages didn't keep up. And now, fortunately, mercifully, we're seeing exactly the opposite this go around, where we're actually seeing wages go up faster than inflation. And that's where the relief comes.
On the affordability front, Greg wrote an interesting piece. Everyone's talking about affordability crisis, but it can't be solved. In other words, he's saying it's a moving target. Today, it could be beef prices. They can go down, and then something else may go up. And so people will always have something to point at saying it's too expensive. How do you solve something like that?
Well, we didn't have an affordability crisis in 2019, right? Like this whole idea that, okay, something is going up in price and then something else will go down. Okay, that's always been true. But what wasn't true was everything going up in price so much. What wasn't true was the monthly mortgage payment on a median price home doubling in less than 4 years. This can be solved. You just have to remove all the bad public policies that got us here.
Yeah, and of course, student loan thing. I mean, Obama has his name all over that. He took out the private sector. He took out banks that would have looked at it and say, hey, we can't give you this money for a degree in this thing because you're never going to pay it back. That was their function. Instead, he called them greedy and said the government just start stamping everybody. I got to ask you, speaking of old protocols and thing, I like that when you put this out, right? One company owns all the meat packers, so effectively there's one meat packer. Mm-hmm. You have a lot of Republicans who've been at odds with the administration in the sense that, it's free markets. So if it's just one, it's just one. Don't worry about it. You never break up a monopoly because competition will eventually do that job. Same thing with the Federal Reserve, same thing with interest rates. How do you square that circle? Because you're sort of in the middle of it. You know, you hear it all, you know it all, and all of these people come to you.
Charles, the big thing is you have to look at how did this monopoly happen, right? If you go back and look at something like Standard Oil, there was the classic case of offering a better product at a cheaper price for consumers. And if you look at a lot of what we see today, that's not necessarily how so many of these monopolies have occurred.
Right.
It happens through government lobbying and regulation that drives out all the rest of the competition.
Right.
And so there's only one man left standing.
And that's not a free market.
Right.
EJ, good stuff. Thank you, my man.
Thank you.